Hi everyone, I'm Ali Hussein from H2 Team Orlando, Keller Williams of the Parks. And we're joined by my other half, Uzi Hussein. Keller
Hey everyone.
And we have one of our preferred lenders, Shaheen Wazir from Christensen's Financial.
How you doing, guys?
Hey, Shaheen, there he is.
Hey, Ali, Uzi.
Hey
Having
Shaheen.
fun at home? Good.
Having fun.
Guys,
We're
guys,
practicing social distancing, and we're actually in separate rooms.
Oh, really? Oh, wow.
Yeah.
That's ultimate social distancing there.
It's at least 6 feet.
Yeah, me too. I'm in my office all by myself, so perfect.
Wonderful. All right. So I guess really, thank you first of all, Shaheen, for giving us your time today and joining us. I know that you're still pretty busy and getting us our clear to closes. We appreciate that.
Oh, you're welcome.
So this meeting, really, the whole intention and the reason why we wanted to have it was there's a lot of misinformation right now, a lot of confusion about what's happening, and not only what's happening in the mortgage industry or with current mortgages, if someone was to try to get qualified, if they're in the middle of getting qualified, but also for those homeowners that might find themselves in a situation where potentially they've either been furloughed or they've even lost their jobs, and they're sitting there going, hey, what do I do? What is my best recourse? What am I supposed to do? Help me navigate that. So we kind of wanted to be a resource in that regard and help you or rather ask you to help us and help them be able to stay away from anything that could potentially be a problem that could come back to bite them, and also at the same time let them know what their choices are at this point in time.
Yeah, that's what we're trying to do is, get out as much information as possible and accurate information. It's, like you said, there's a lot of misinformation going on. People are confused. They don't know what to do. So basically, the reason where the market is right now is mostly because of this forbearance issues. So what's going on is the increase in forbearance for the loan servicers. So what happens is when the customers don't pay their mortgage payments, the loan servicers are still required to forward those payments on. So that's why we're seeing all these risks that the investors are not willing to take right now. You're seeing tightening of the market. A lot of investors are just trying to manage their risk right now instead of new production. So you're seeing tightening of guidelines, more overlays on the mortgage. Like a lot of the investors have capped their the credit score requirements and lowered it to like some to 640, some to 660, some to 680. And we've heard Chase, they're not accepting applications under 700. So it's,
right.
So you're seeing tightening of those guidelines and more restrictions on there. Luckily, we have a lot of investors, and sweet spot right now is mid 600s. If you're at least that much, then all your programs are still on. All your FHA, conventional, USDA, everything is on as normal, and it's actually a pretty busy time. There's a lot of buyers out there. There's less competition among sellers, so it's still springtime, so it's still peak buying time right now.
Are you still also seeing, since the COVID-19, are you still seeing some refi applications go up, or is refinancing taking a little break?
No, we're actually seeing a lot more refinancing than purchases. Generally, on a normal market, it's 80-20 ratio, 80% purchasing, 20% refinancing. Right now, it's like 40-60. So we're seeing more refinancing opportunities right there. The rates are still very low. Conventional rates are in the low threes, mid threes right now. So we're seeing a more uptick on refinancing compared to new purchases, because it's getting harder for realtors to show houses in the traditional way. So your showings are lower, but at the same time, refis are going up. A lot of people are working from home, They have more time to look into it. So it's different reasons, but mainly the rates are really favorable for refis and purchases. So definitely
Yeah.
seeing a uptick in that right now.
I'm glad you touched on about showings. Just as a side note, I know this conversation is more about mortgage, but just as a side note, there's a lot of virtual showings and video tours that right now that we're offering.
Right.
And in vacant homes, it's different. Vacant homes, you can still, pretty much go in and see the home. Of course, we do have all the COVID, the CDC requirements, like the gloves and Lysol and so forth. But coming back to mortgages, so, in those instances where a homeowner may have been laid off or furloughed or what have you, or maybe even loss of hours so that now their income is reduced, what are some things that someone along those lines should be thinking about doing if they're truly unable to make a mortgage payment?
Right, that's a great question, and unfortunately, a lot of people in that situation right now, they're finding. You see a lot of talk about forbearance, but they have to be careful on what the terms are. They're not waiving off the payments; they're just deferring them to 3 or 6 months later. So what's happening is, say they get approved for a forbearance, they don't have to make your payment for say 3 months, for example. But keep in mind, the 4th month, you have 4 payments due at one time. So
do you think some servicers would be doing any kind of a payment plan in that instance, as opposed to requiring the balloon payment?
Yes. So if they're unable to make, say, 4 payments at the time after their forbearance is up, they can stretch it out for 12 months, those extra payments. But keep in mind, you still have your regular mortgage payments, and then you'll have those 4 months of payments that were deferred, stretched out over the next 12 months. So your total payments are going to go up. So you want to keep that in mind before they agree to such plans.
So really, if you're able to make your mortgage payment, make your mortgage payment. That's
definitely that's the ideal situation, is try to make your mortgage payment. Maybe defer some other bills out, like your car payment or credit card payments. You see a lot more flexible terms on that. For instance, car payments, they can even say you skip 2-3 payments, they can add it on the back end of the loan, so it's not all due at the same time. So maybe defer those if you have to, but try to make the mortgage payment as much as possible. Of course, if you can, then forbearance is an option, but as long as they're educated on it and talk with your servicer, make sure you understand the terms completely before they
upfront, right? Upfront.
Yeah, exactly.
And now, are there any credit bureau, like their credit score? Are there any credit score penalties that would happen if someone did in fact do a forbearance?
You got to talk with the servicer to make sure they're not reporting as late payments, because you're on an agreement basis. So they shouldn't be, but always double check first to make sure there's no they're not reporting late payments while you're on this program.
Right. Is there any kind of a? Oh, sorry, I didn't mean to cut you off. Go ahead.
No, what I was saying was also keep in mind, if they're looking to do a refinance later on, they get into a forbearance, they can do a refinance.
Until that's paid off.
Yeah, at least 12 months after your new payments start, to make sure you're paying them on time.
So that's a really good point.
They're considering, so they think about that you won't be able to do financing for at least a year out after that, or if you're looking for a new home purchase, if you're in forbearance, you can't do all that. So
you'd have to wait a longer time.
Exactly.
Excellent. Those are excellent points. Wonderful. So with regards to if somebody is in a situation where they've either been furloughed or, they're unable to make their payments, or it's very difficult, should they explore it, or is there any opportunities for any kind of a loan modification or reduced payment or anything along those lines, as opposed to a complete deferment or a complete forbearance?
Well, the modification usually is done after the forbearance period. So say they did a forbearance, which is temporary, usually 3 or 6 months out. After that, if they're unable to make the payments or catch up, then they can do a modification at that time. So
Great.
it's like a two-part process. Yeah, it's
Gotcha.
the first step will be the forbearance, and then if they're unable to make those, come up with all the payments at one time, or if the spread out over 12 months is not feasible as well, then look into the modification of the mortgage.
Gotcha.
So,
And then just to switch gears a little bit here, did you want to share with us anything as far as what's happening with the industry? With we've been hearing about certain mortgage companies. This is from a couple weeks back, but I wanted the dust to settle before we would get into this discussion. But are there some mortgage companies, even those that are really well capitalized, that might be going through some financial hardships themselves right now that you're aware of?
yeah. Unfortunately, you're gonna see a lot more mortgage companies. If they are undercapitalized, you're gonna have those issues. If they are servicing loans, they might have those issues. Usually, they have reserves for such kind of events, but your normal reserves are for your normal market situations. But if
Right.
forbearance gets too much or too many people do it, then eventually they're going to run out of those reserves unless the Fed steps in and helps them or has a plan for that. But so far they don't. So that's why you're seeing the tightening of the guidelines.
Right. Okay, great. And then, I know you don't have a crystal ball, and none of us do. But just from what you're hearing in the mortgage circles, what is I guess what do you feel is the outlook? If this, if America reopens, say in a month or 2 months, or if it was to still be 6 months before things get normal, what are some potential things that are being talked about as far as what the mortgage industry would look like, or what financing would look like?
I think it will come back to what we were before. It might take a while. It won't be like right away. It's just so much unknown right now, so it's hard to predict.
Sure.
But I think things will bounce back, and they're not too bad right now for the mortgage and the real estate business. But you'll see, normal cyclical issues where you'll see realtors and mortgage lenders, will leave the market. Usually the weaker ones leave when we are in the cycle. And then during boom time, you see people entering the industry.
Oh, sure.
So you'll see that cleaning up
Right.
on that side for realtors and lenders.
Right.
But I think we should be fine. Yeah.
And then Shaheen, for any of our viewers that might either themselves or they may know someone that might have gone through one of these other banks, and they now they find themselves in the middle of their qualification process, that something has changed. Would you because you guys have some different investors, would you say that it would behoove them to run their credit through you, their application process through you, to see if, based on your guidelines that your company is still doing, that you might be able to get them qualified? Would you say that that's a greater possibility versus, say, a Chase Bank?
Yeah, definitely. Sure. We're actually seeing a lot more realtors and a lot more referrals calling us to see if we can get their guys approved. They've been denied by lenders just because of all the guideline changes, like all of a sudden. So we're seeing a lot of second opinions. A lot of banks are not even accepting new mortgage applications.
Right. That was going to be my next question. So we'll definitely have your contact information again here, so people can jot that down. And then with regards to any new applications, what are some COVID-19 measures that you guys are doing right now? I mean, I know most people don't necessarily have to come and meet with you in the office anyways, even pre-crisis. So, but is there anything else that you guys have implemented to help them, not have to necessarily meet you face to face in order to get everything done?
Yeah, mostly most of the business is on the phone, internet, email, text. So it's pretty much as normal. We're going on a lot more Zoom calls and Skype right now instead of face-to-face meetings. So not much disruptions for us. I know it's harder for realtors, with all the new guidelines. But so far, everything is normal. We're also doing hybrid closings, where most of the documents can be e-signed prior to, And
Okay.
at closing, just a couple of ones that need to be notarized. So we're trying to streamline those, avoid contact as much as possible and try to keep it safe for everybody.
Wonderful, yeah, and that's definitely what's happening, right?
Yeah.
Title companies have also
Yeah.
adapted to this new
Yeah.
norm, and they're also doing things like even for earnest money deposits. There's Ali, do you remember what that one title company was doing for earnest money deposits?
They have a couple of different ones that they're using, like typically like a Venmo or not
Venmo
quite a
payments.
PayPal, but
Oh, really?
yeah, exactly. This is actually a little more secure version of that. But it's
Right.
like the idea of
All right. Are you seeing those drive-through closings also?
oh yeah, that's another
Yes.
one that's going on. Drive-through closings.
Yeah. Sit in your car, sign your documents, and then
Hey, do they
leave them
provide?
at the door.
Do they provide you with a chocolate shake if you want one?
I know. Huh? I don't see why not.
Right?
Maybe
All
a
right.
champagne toast after that.
There you go. Ali, did you have any other questions for Shaheen here?
No, actually, I think you did great. You guys that was pretty much like all the questions I was thinking of. You guys were chatting about it. I'm like, oh, that's perfect.
That's some good stuff we covered, yeah.
Yeah.
All right,
Appreciate it.
great. Well,
Yeah.
Shaheen, would you be up for doing another one of these maybe in a couple of weeks to see how things
Yeah,
are at that point in time?
Probably have some more news, and every day hearing new stuff. So get you the latest update and keep everybody informed and educated.
Fantastic. Thank you so much for being a trusted resource and a great lender to us and our clients and
Welcome.
everyone out there listening. Shaheen will be back, as maybe the landscape changes and we have more good information to bring to you. And in the meantime, as I said before, if you do have someone that, if you just want to even ask him any kind of a lending question, even if, I'm sure he'd be more than happy to be a resource to you at this point in time. So we'll have your contact information up as well.
Yeah, absolutely. Anytime. Give me a call and try to help you out.
All right, guys. Everybody stay safe. Thanks for watching.
You too. Thanks,
And-
Lily. Thanks.
All right.
All right.
Thanks,
All right.
guys.
Bye,
Good day.
guys.
See you.
Bye.
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 Bye.